Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SEABOARD Corporation Annual Report. SEABOARD Corporation is a diversified conglomerate with operations in various sectors worldwide. At its core, the company operates through 6 distinct segments: pork, commodity trading and milling, CT&M, marine, liquid fuels, power, and turkey. The company's business portfolio includes pork production and sales to major food processors, grocery stores, and distributors. The CT&M segment is involved in sourcing, transporting, and marketing various commodities such as wheat, corn, soybeans, and oilseeds. This segment also produces and sells wheat flour, maize meal, manufactured feed, and other related products. In addition to its agricultural business, SEABOARD Corporation has a significant presence in the ocean transportation sector through its marine segment. The company provides cargo shipping services, owns and leases containers and equipment, and operates terminals and warehouses for cargo storage. The liquid fuels segment is focused on biodiesel production and terminal facilities. Meanwhile, the power segment generates electricity for the power grid in the Dominican Republic. SEABOARD Corporation's turkey segment produces and processes turkey products for domestic and international markets. Furthermore, the company has diversified its operations into sugar and alcohol production, as well as processing and selling jalapeno peppers. With a rich history dating back to 1918, SEABOARD Corporation has established itself as a global player in multiple industries. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what could cause a stock price to skyrocket. The stock price of SEABOARD Corp has seen a significant surge in the past year, leaving investors and analysts eager to understand the underlying factors driving this trend. One possible reason for this increase is the company's strong financial performance. A robust revenue growth, coupled with efficient cost management, can lead to higher profits, which in turn boost investor confidence and drive up stock prices. Another factor that could be contributing to SEABOARD Corp's rising stock price is its strategic business decisions. The company may have made savvy investments or acquisitions that are yielding positive returns, further enhancing its financial position and attractiveness to investors. Additionally, changes in the industry landscape or market trends can also impact a company's stock price. Furthermore, external factors such as economic growth, interest rates, and regulatory policies can influence investor sentiment and drive up demand for certain stocks. If SEABOARD Corp is well positioned to benefit from these favorable conditions, its stock price may continue to rise. It is worth noting that the stock market is inherently unpredictable, and multiple factors can contribute to a company's rising stock price. A thorough analysis of the company's financials, industry trends, and external factors would be necessary to pinpoint the exact causes behind SEABOARD Corp's skyrocketing stock price. SEABOARD Corporation maintains a market capitalization of $5 billion, broadly in line with the industry peer group. SEABOARD Corporation trades at a higher price-to-earnings ratio of 13 times and a lower price-to-book ratio of 1.04 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 37% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has aggressively reduced its share count despite weak revenue growth. This raises concerns about whether buybacks are being used to offset underlying business challenges. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth and decline can be identified through an analysis of various segments and regions. Revenue growth is primarily driven by increases in cargo shipping services, biodiesel production, electricity generation, commodity trading, hog production, fuel supply contracts, and capital expenditures. These factors have contributed to a significant increase in revenue across different segments, including the marine segment, liquid fuels segment, power segment, commodity trading and milling segment, pork segment, and others. On the other hand, revenue decline is primarily driven by decreases in grain purchase contracts for resale, hog procurement contracts, hogs and pork products sales, and the expiration of federal blenders credits. These factors have led to a decline in revenue across different segments, including the commodity trading and milling segment and the pork segment. In terms of regional performance, revenue growth has been observed in the Caribbean, Central, and South America region, with an increase of 12% in 2025 compared to 2024. Africa also witnessed revenue growth, albeit at a slower pace of 5%. In contrast, the U.S. market experienced minimal revenue growth, with an increase of only 1% in 2025 compared to 2024. Overall, these drivers highlight the key factors that have contributed to revenue growth and decline across different segments and regions. The net income of a company underwent significant fluctuations between 2023, 2024, and 2025. In 2024, the net income decreased by 60% compared to 2023, dropping from $227 million to $90 million. However, in 2025, it increased substantially, rising by 455% from 2023 and 488% from 2024. The profit margins also experienced changes during this period. In 2024, the operating income as a percentage of total revenue decreased compared to 2023, standing at 1.9%. Conversely, in 2025, it increased to 2.44%, indicating an improvement in profitability. A closer look at the segment-wise performance reveals that the pork segment saw an increase in net income by $17 million from 2024 to 2025, despite a decrease in profit margin by 0.7%. On the other hand, the CT&M segment experienced a decline in both net income and profit margin during this period. The changes in net income and profit margins can be attributed to various factors such as commodity price fluctuations, increased costs, reduced demand, and competition. These external influences likely impacted the company's financial performance, leading to the observed variations between 2023, 2024, and 2025. The company's financial performance has shown significant improvement in its ability to generate positive operating cash flow. According to the provided information, the company generated a substantial increase in operating cash flows in 2025, reaching $568 million compared to just $49 million in 2024. This notable increase is a clear indication of the company's improved efficiency and effectiveness in managing its operations. The data from various pages of the report further supports this conclusion, with net cash from operating activities also showing a significant increase to $568 million in 2025. Furthermore, the report explicitly states that the company has achieved positive operating cash flow. Overall, these figures demonstrate that the company is now generating sufficient cash from its operations to support its growth and expansion plans, indicating a strong financial position and a promising future outlook. The company's debt level and interest expenses have undergone significant changes over the past few years. Initially, as of December 31, 2025, the long-term debt stood at $991 million, which included a term loan due in 2033 worth $953 million. However, this figure decreased by $10 million from the previous year. A closer look at the data reveals that the face value of long-term debt also saw a decrease, from $1.002 billion in 2024 to $991 million in 2025. Furthermore, domestic debt securities experienced a substantial decline, dropping from $635 million to $158 million, a staggering 75% decrease. In terms of interest expenses, there is some inconsistency in the data provided. On one hand, interest expense decreased by $2 million from 2024 to 2025, and the figure for 2025 was -$70 million compared to -$72 million in 2024. However, another source indicates that interest expenses increased significantly from $56 million in 2023 to $75 million in 2025. The weighted average interest rate for outstanding lines of credit also rose from 5% to 6%, which could be a contributing factor to the increase in interest expenses. Overall, while there are some discrepancies in the data, it appears that the company's debt level has decreased, but its interest expenses have increased over time. Management's outlook for the company is one of continued investment and expansion. They plan to invest in businesses to increase reliability and efficiency, with a focus on innovation, sustainability, and vertical integration. This will enable the company to expand into new markets, including international sales, and tap into growing demand for food and agriculture products. The company aims to diversify its revenue streams through various business segments, such as pork, CT&M, marine, etc. To manage risks, they will continue to use derivatives, foreign currency exchange agreements, and interest rate exchange agreements. Additionally, SEABOARD plans to invest in non-consolidated affiliates to further its business strategies and partner with entities that have expertise in certain industries and countries. Management's primary focus is on long-term sustainability and profitability, allocating capital based on historical trends and forecast, and identifying areas of opportunity for growth. This strategic approach will enable the company to achieve its goals and maintain a competitive edge in the market. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company has invested in 3 key entities: SEABOARD Triumph Foods, LLC, Daly's Premium Meats, LLC, and SEABOARD de Mexico USA, LLC. These investments demonstrate the company's commitment to expanding its operations and increasing its market share. On the other hand, the company has also engaged in several divestitures through settlement agreements with various classes of plaintiffs and states. These settlements have been reached over a period of time, from June 2023 to September 2025. The divestitures are likely aimed at resolving outstanding legal issues and allowing the company to focus on its core business operations. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company paid out a total of $9 million in 2025, with a notable payout of -$9 during the period. However, it's essential to note that this negative payout is likely an error or a one-time occurrence. On the other hand, the company has been actively buying back shares from its investors. In 2025 alone, it purchased 157 million shares between September and November, with a total repurchase amount of $39 million. This significant share buyback program demonstrates the company's commitment to returning value to its shareholders through various means. Concerns about inventory buildup or supply chain disruption are prevalent in the industry. One of the primary concerns is the potential for supply chain disruptions due to various factors such as natural disasters, cyber attacks, terrorism, and labor unrest, page 7. Additionally, changes in tariffs and trade restrictions can lead to increased costs and supply chain disruptions, page 7. Inventory buildup is also a significant concern, with total inventories increasing by $115 million from 2024 to 2025, page 42. This increase in inventory levels can be attributed to lower sales volumes and availability of certain commodities. For instance, the pork segment has significant inventory levels, accounting for 37% of total inventories, page 20. The industry is also vulnerable to supply chain disruptions due to various risks such as inclement weather, mechanical failures, grounding, fire, explosions, and collisions during ocean transportation, page 9. Furthermore, changes in government policies and customer preferences can affect demand and supply chain dynamics, particularly in the liquid fuels segment, page 12. The dependence on a single supplier of natural gas is another concern, as seen in the Dominican Republic, page 13. The pork segment is also affected by fluctuations in market prices for hogs purchased from third parties, which can impact profitability and cash flows, page 20. Overall, the industry faces significant concerns about inventory buildup and supply chain disruption. That concludes the financial summary for SEABOARD Corporation. Feel free to comment below, and I will be happy to answer them when possible.